Master Trader Live. Simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Welcome back, everyone. Excuse me. Welcome to those that are new. My voice. Today, we're going to be talking about trading, minimizing trading losses and boosting profits. Is that possible? We're going to delve into that. And of course, through the proper money management, it is possible. Chart analysis done the proper way, it's possible. Trail stopping and so on. So let's get into that before my voice gives away completely. Dan is with us.
Yeah. Hey, I'm here, Greg. I'm getting an error on says Zoom is unable to detect a camera, but it's always plugged in. Oh, that was weird. I didn't touch a thing. All right, so all right, here we go. Yep, good afternoon, everybody. Another great subject. And yeah, everything we teach, it really kind of fits in this title. So it is a broad-based title, but we're going to be focusing a lot of today's on the concept of relative strength weakness, not only to pick out the best patterns, and then Greg talked about, monitoring. And when we're in trail management mode, bar by bar, trailing pivots, selling into strength, trailing, etc., we are using a lot of these identical concepts. So these concepts make up our technical approach to trading anything that moves. And Greg would say, hey, we should have money management, the top one, because that's most important. And I get that, but it doesn't flow on my slide here is easy, because money management is moot if I don't have a compelling setup. Give me a compelling setup, then our other concepts, where is the setup and the trends, showing relative strength weakness, which we're going to define and give you many different types of ways to measure that. What are the broader markets doing? Volume, moving average analysis, that's secondary, but with our clean daily charts, all of these concepts pop up in our head simultaneously. So this may sound like a lot of stuff here, but it's you'll see in the charts just instant. It's right there. I like starting simple for little Johnny. What does relative mean? Well, let's see what the dictionary defines it as. So it exists and has a specified characteristic. All right, what the heck does that mean? Well, the key part is I'm comparing something to something. And it's showing me that one is stronger than the other based on how you're comparing those two issues. In trading, okay, so what do we want to compare it to? This is how we do it. We're not using a relative strength indicator in your platform of an oscillator, which is just looking at the change in price over time, and it's plotting a squiggly line. That's like irrelevant to us. We can see that in the pattern, in the candlesticks, whether slowing momentum, etc. So I'm going to show you many examples. Our approach compares the issue, the underlying stock, option, cryptocurrency, it doesn't matter. What's it doing to the broader markets? What's it doing to the sector? What's it doing to other stocks in the same sector? What's it doing to the market internals? What does the market internals mean? Well, the market could be tanking and your issue is just consolidating through time. Greg had made that statement in his pre-market review this morning, saying the bullish sideways action of the spiders is a bullish time correction. So Greg wasn't comparing it saying, hey, it has relative strength, although we could, this is some other index that was not holding as strong, but it's actually showing relative strength by the nature of it consolidating at resistance. So, all right, that's
Q's, Dan. Was
yes,
that, was
yeah,
the Q?
yeah, they were today, they were similar, but yeah. All right, enough of that. Let's jump right into examples. So Greg, why don't you kind of, here's our bullish money patterns. This is our starting place. So I have a pattern. And then I take this pattern and we apply those other concepts to see if we have a high probability trade setup. But today's topic, we're going to focus on relative strength or weakness. So just in your mind's eye, and Greg, you can add a couple of comments. We could talk about relative strength or weakness in every single one of these patterns. It has a different message.
Okay. So I circled 3 as a comparison starter to say which one is showing relative strength and which one's showing relative weakness. The title says bullish money patterns, which assumes they're all going to go up. But as a comparative, as to relative strength and weakness, we would say that these two were showing relative strength to this one because they didn't pull back. Now, they're all tradable, but does that mean these two will go up more than this one? Not really. I mean, we have to always put these in the context of trend, support, and resistance. Any of these could be setting up from a climactic buy setup, which means it went down a lot. Or are they all in uptrends? Or are they at support? Just with this relative strength and weakness, this one pulled back. This one went sideways, and this one went sideways. So those showed relative strength, which is supportive of a bias that they should go up with greater ease, even though this one could play catch up. But just sticking with our concept here right now, those showed relative strength.
All right, let's jump into concepts now. I just grabbed these 2 charts this morning, so it's pre-market, the Qs, and I picked the strongest of I call them the 4 horsemen myself, the Qs, spiders, diamonds, IWM. So the Qs have been showing amazing relative strength in light of this collapse, which occurred. IWM, as you know, has a lot of regional banks, biotechs, and so it very often acts very differently. So the regional bank crisis crashed the other 3 indexes. This one is the weakest. If you want to go look at the other 2 now or at the end of this session, or maybe we do it together in 45 minutes when we turn over to real charts. So this is the strongest. Why? Well, you're going to learn that today, but I'll give you a quick answer. Greater than 100% retracement, bullish consolidation at resistance. Look at the moving averages rising 2050. This one is in a downtrend, lower pivot highs, lower pivot lows, 2050, 200, all down. Now I have a note here saying don't confuse relative strength and weakness with a trading opportunity, because many times, so take this for example, there's nothing to do here. It's resting, it's consolidating. There's no pattern right now on the Qs, and it's again ignoring today's data. Whereas the spiders and diamonds, not this one because it's the weakest, but spiders and diamonds actually might give a better trading opportunity. Why? Because it has a nice big mature bottom, multi-week bottom with this same price point. So first slide, Q's relative strength to the Russell 200. Now, this was a slide, this is Apple that we gave our subscribers last week at the same time. We actually just sent out our weekly trade review was on this exact subject, this exact slide, talking about today's session. So notice though, even though this is part of the Qs, it's a FANG stock, it was showing relative strength, not only to the broader markets, but to the FANG stocks. If you went through all the other FANG stocks, this was a closing breakout. The Qs weren't. The Qs are here at resistance. And we know that's a dog. Then we have this 1, 2, 3 that Greg talked about. A 1, 2, 3 is a wide range bar. What's wide range? It's a big fat green bar, Johnny, relative to the other ones, with little to no tails. Then I want an inside bar in the upper third. I want this pattern from consolidation. Remember our other concepts here. Where is this pattern? It's on support. It's from a consolidation. I have rising 2050. And then we buy over the high of those two bars. We actually gave what I call a directional option trade. So we bought call options. The benefit of trading options as a directional is there's less risk and less leverage. I'm sorry, greater leverage. This only cost us $4 a share to participate in our bullish bias. Whereas if you went out and bought 100 shares of this at whatever, $157, that's $15,700. And this cost us $400. So relative strength to the broader markets and to the FANGs. So Greg, you kicked in. I talk a lot. So this is the internet sector with XLB. Now, why on earth am I showing you this? Well, we're just showing.
Those aren't current, yeah, right?
No, they're not current at all.
Right.
So Greg, yeah, so I'll just lead this up for you, Greg. So, our top-down approach, Greg does this in our weekly letters where he does the very detailed market review, broader markets, sector, relative strength, weakness with patterns, of course, and market internals, inner market analysis, and then, we go under the hood looking for patterns.
Yeah, so FDN is the internet index. XLB is materials, I believe. So that could really lead into an intermarket analysis discussion, those being at the same time, why one was going up and one was going down. But that aside, this moving up like this, and this is, we do this every day. And of course, on the weekends in the letters, we search for what's showing relative strength and weakness throughout, just looking at thumbnails of all the ETFs and seeing which ones are moving up and which ones are moving down. The reasons why is another discussion, but this one was clearly showing relative strength, and this bottoming pattern down here this was going up. Something happened here in June. I don't remember these charts, but obviously something bad happened here within this sector, and the internet sector just kept marching higher, rising 20, rising 50. And so looking at the moving averages, we call them visual aids. So even if I didn't know what these charts were, as I would be flipping through the charts, I would just look at this picture and say, the one on the right is showing relative weakness and the one on the left is showing relative strength. As Dan mentioned, it doesn't mean I should take action, because this one, had a nice continuation pattern right here. I love that. That's what we call a 1, 2, 3, 4. That is such a high probability pattern as a continuation pattern, because that bar broke below the others and it's a range expansion bar. So as a breakout pattern, that's a really, really good one. And this one, having dropped so much, And something I talked about in the weekend letter is being what I call the mini climactic. And it's a mini climactic because it just started the move down. It was vertical. So while this, and there's a lot of these patterns right now, just like this, it's interesting that you picked this, Dan, to show, because there's a lot of these patterns right now that broke down out of consolidations, and they're retesting, and they look like they're going to pop up a little bit, but eventually they typically drop again. So relative strength, yes. Do I want to buy this here? No.
Right.
There's no pattern. It's a little extended in the short term. I don't know what's lurking over here to the left, but I would have to look. This one here could be a scalper buy if I got a retest pattern.
Right.
So this one showing relative weakness as on a short-term basis, it could, if I got a bar here, it took out these highs, that could go up, and you could do credit spreads on something like this. And of course, we could look inside this. This is a sector. We could look inside, delve into other, it's an ETF. We could look inside that ETF, and I bet you we could probably find things showing relative strength that might be in an uptrend.
Well, correct, or a better looking CLIMO that might have already cleared this resistance and then with a price void. So for those of you who want to study what we're saying more right here, print this screen, because I gave you some checkpoints here that it just jumps out that Greg and me, because of experience. But here's some traits how you objectively compare. So you can write some notes of each one of these at various points in time, and then it comes to your conclusion.
So let me just add a little bit to that, Dan, to what you said. So Dan is saying, here's all these points to review, sport trend, so on and so forth. So what our approach here is one that teaches you how to think by what we call a thought process, where you would say, okay, price pattern. Do I have one? Do I have a price pattern here? Well, yeah, but it's big, but it's not an action pattern just yet. Can I define the trend? Yeah, this one's going up, that one's going down. Is this at support? No. This one created support, but I don't know what's over here. Does this have resistance? Yes. Maybe, maybe not. I don't know what's over there. Void. Yeah, that's got a void. That one's got a void below. Maybe it's got one up. I don't know. Relative strength, we've already covered. Red bars ignored. Right here. Right here. Red bar ignored? No, 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 no. So it's a great slide to go through that. Again, said print it out, and then you could go to your computer and say, hey, and it's kind of like a checklist, which would be, you're not going to do that in the moment, but as through a learning process, it's a great way to learn, to train your mind to think that way.
So this is kind of the intermarket analysis. And again, these are old slides, but they're timeless. It doesn't matter with the concepts that we're teaching you. So the spiders and the Qs were at all-time highs. Why are the transports and the financials weak? So Greg, this was something you talked about, at the coronavirus highs using intermarket analysis. What I just typed there. So why are the transports breaking down? What happened to the financials? So that, these are both weak, of course, as these were making all-time highs, but that was an intermarket analysis observation. So I have the same concept here. So now I'm comparing two different oil sectors. Greg and I both have 6 screens that we trade from. I watch 26 15-minute sector ETFs during the day over here. I just turned left, and I got all 4 oil ETFs right in a row. So I can just, this is a daily chart, of course, but I can quickly see which one of these are weaker. And I have the same note here don't confuse the concept with a trading opportunity. So these are both 1, 2, 3s. But I asked a question here, which do you think is a better 1, 2, 3 short at this point in time? The XOP or the OIH? Well, this one's weaker. If you go apply all these concepts right here, the OIH is weaker. It came all the way back down to the 50 MA. It came all the way back down to major support. It came all the way back down to this breakout point. This one is a 1, 2, 3, but I have a price void here with more room to fall. So even though this one has stronger, just based on what I just said, this is a better trading opportunity. So as Greg mentioned a moment ago, this is the same XLB slide. And so I'm showing you exactly what he told you verbally. These are the components of XLB. And this is what we call drilling down. And I'd be looking at this point in time, because it's down so much, I actually would be, as Greg said, looking for longs, looking for something either in an uptrend that's showing relative strength to XLB, or is also a CLIMO, but is showing also relative strength in the sense of it could be over these pivots with the price void. And we just go through them one by one. And that's another way how we find trading opportunity using the concept of relative strength and weakness.
This particular index is very diverse in the stocks that are in it, meaning this in here. That's related to copper. That one is steel. This one is agriculture. That's paper, chemicals. What else is in here? I forget what some of these others are, but it's a very diverse index, and it tends to do much better in a stronger economy and vice versa. But it would be relatively easy in this index to find something that could be going up and another one totally to be going down, whereas and that would be relative strength and weakness versus, maybe chemicals versus copper. Whereas if you were looking at semiconductors, it would be a truer measure of relative strength as to two companies that do the same thing and one outperforming the other.
Yeah, good point. So this is what let's look at the title here. Bullish price action and relative strength. How do we define that? One is consolidation through time. Red, and I have it right here, consolidation through time, topping tails and red bars being ignored. Now this all I'm doing is showing you relative strength here. That, just to emphasize again, relative strength is not a tradable event. It's just, I still need a pattern. I need a tradable pattern. Now this bar right here, I have a closing breakout range expansion bar. Now I have a tradable event. Consolidate, this is relative strength, consolidation over time. There is my add or new trade. Here's a gap over this bar.
Does everybody looking at this chart understand, looking at those boxes, why Dan pointed to that and saying now it's a tradable event? Or why wasn't it a tradable event before? There's something common. Not you, Sam. We know you know. Anyway, so stop showing off. Okay. So look at these bars and look at the last bar. What's the difference? What do you notice? Nah, forget the volume.
Forget volume.
Yeah, that's not today's subject, but for the moment, let's just ignore volume.
And I'll give you a hint. I already answered it.
All right, so so as we look at these, and what you find is that what tail. That one is, hey, that's something. but tail, no tail, and the range is bigger. Tail, closes at the high, range is bigger. Tail, range is bigger, closes at the high. That's what's got to catch your eye, that look at what changed here. And what does that mean? Well, that means that buyers were confident right into the close with a strong belief that it was going to go higher the next day. They didn't back away, whereas, all of these others, that was a big green bar and it got sold aggressively and ended with a topping tail. That says, hey, I think that has the possibility to go down, but it's at support. And then it doesn't. And then it's like, okay, maybe we're off to the races here. So you could have bought above the high of that bar since it closed near the high, but your stop's going to be down here, which leads to money management. But the takeaway here is these bars are expanding in range and they close near the high. How about the first wide range green bar?
Yeah,
And
I
the-
asked him if he's talking about this or this one with the arrow. If it's this one, it could be the start of a counter trend bounce. It's in a downtrend. So January. So yeah, if you want to answer Greg or me.
Okay, so to me, that's in a downtrend.
Right.
It's a little extended. Next, so look, we teach a thought process. So when I see that bar with the information that's there right now, I know it's a little extended. And I see the size of that bar and I see the volume. So what should I do next? I should look to the left. I should look over. Why did that happen? Why? It should be in an area of support if it turned like that, because buyers are bidding at support and there was aggressive buying there. Look at the volume that occurred. Now, that doesn't mean it was going to go up like that. But you can see when it reached there, selling increased. And now as it came down, that gap reversal, we're starting to put together other pieces here to put them together. But that bar in of itself would have caught my attention, but I wouldn't have done anything.
Well, and Don asks a good question, so let me just finish it and we'll move on here. So when if I saw this bar, it's like, okay, you got my attention. It's not a tradable event, but you got my attention to start watching it. There people in the green room know I'll watch something for a month if I need to. If I think it has the opportunity eventually, and I say it's just a matter of time. I don't know what day, but I will be trading you. So this is in a downtrend, declining 20, declining 50. You got my attention. Right. I think I don't know if Don's asking about which one of these, so I'm just going to answer it so we can move on. So we use bar by bar analysis to take an additional pieces of information. And I still don't have a tradable event. But now this question mark Greg just put there, now you got my attention even more than the first green bar. Why? Because I have a bottoming tail which traded under the prior 2 bars lows, closing breakout with a range expansion bar. So Don, I would buy over the high of this bar with the question mark. Greg uses the or sell a put spread or whatever. Go to an intraday chart for an entry. Greg uses the analogy of the weight of the evidence. So the weight of the evidence over the high of this bar is gonna plow through these topping tails. So I would enter over the high of this bar. I'd start off with a put spread and maybe you got a nice day trade. And it turned out to be a home run little 2 to 4 day swing trade.
So what I drew there at the bottom of this bar, which was coming down to some support, is trending down, and it goes up a little bit on close to close. And as it comes down here, there were buyers down here. So this was, hey, you got my attention. Dan and I both said that, but it's not anything to act on. This one tells, as it comes back up like that, the buyers thought, hey, that was cheap. They wanted to buy it again. And so it took out these lows and flipped up. And that's why you would want to buy it above the high of that bar, only on a short-term basis, because it's trending down.
Yeah, just trail. Prior bars, you had a home run entry all the way up, or, a home run trade. You trailed all the way under this prior bars low. All right, let's keep going. We always like to save time to look at real charts. So this is same Costco, 2 out of 2. What am I doing here? Relative strength to the sector. Okay, what's the sector? XRT. So this strong man is Costco. Do you think Costco cares about all his cousins in the sector? Absolutely not. We say he's on his own page. He don't care. So this is XRT weakness. What are the S&P 500 doing? Also, ugly 180 reversal here, gap down. So there's just more ways to compare it. Relative strength weakness in the sector. So on that XLB slide that we showed you all the components, this is one of them. We did our drill down and we have a little bear flag here, and we shorted under this prior bars low. Sell setup, bear flag, price void, look to the left, has room to fall. And although it's not shown, look what I typed here to our subscribers. It's a bearish 1, 2, 3 on the weekly in a weak sector. So here's 2 other concepts. I have multiple time frame analysis and I have relative weakness. CF, this looks like same sector, same time. We love selling credit spreads just to when we want to predict a short-term high or low. And we have a checklist we go through in terms of liquidity, days to expiration, how much are you going to pay me to take this risk? So on this pattern, same sector, relative weakness, multi-bar turn at the 50 period moving average. So Greg, I love doing this to you. So it's a bear call credit spread. So the 52 is above this dot. When this traded under this bar's low, what do you think the odds? It could happen, of course. We take stops, everyone, but we're odds traders based on our technical opinion. Once it traded under this bar's low, we sold a $2 wide bear call credit spread, took in 37 cents a share. There's the technical setup. And at the time I said, look, the midpoint is 0. Just try to get out at whatever price you can.
So what I'm drawing here, everyone, is for those that don't know what a credit spread is, you're selling something more expensive. This is closer to at the money. So you're selling a more expensive option and buying a less expensive option. You get the difference between the two. And then if it doesn't go up there in the amount of time to expiration, you get to keep the money. If it goes up there, it's a problem. It's like any other trade. But breaking under these lows at that point during the day, I don't know what time it happened, but if it triggered right here, I wouldn't be totally confident in something like this, even though it's in a downtrend. Whereas if I saw the bar at the end of the day and Dan said, what do you think about selling a credit spread here? Then I would say, I think it's a no-brainer if it's relatively short period of time, but it may not have the credit at that point during the day.
Right.
Yeah.
Now
I want to answer a question that was on social media too about when to raise a stop or maybe decrease the stop. So let's say we sold this short under these lows. It's in a downtrend, it's breaking down, whatever. Our stop is going to be above here if we sold it short under there. Now, once this bar is closed, I could lower the stop here. And what I answered there was, look, we need range expansion bars. What's a range expansion bar? It's just a bar that's bigger than the ones that preceded it, like all these bars here. That one here is a range expansion bar. You see it. I don't have to measure it. Or some type of a correction bar. So let's say we sold this short. I'm just giving you an example for stops now. We sold it short because of this rejection bar right here. And now it's going down and I see this bar. Right? Well, these bars here are about the same in range. I really can't bring the stop down yet because it's right here. But when this bar forms, right, this dandy looking breakout failure, ugly bar, and it looks like it's going to go down, I could bring my stop above here because this is such a bearish bar. It shouldn't go back up there. So much of what we talk about here, as you begin to absorb it, it becomes common sense. Because say, sure, I would lower my stop there, or I would lower my stop there because of those type of bars. But you have to understand it to get to the point where it's just like, yeah, that's common sense.
Yep. NVIDIA, so comparing to, so let's say, hey, we're bullish on it on SMH, which is the semiconductor ETF. Then we do the same drill down, find the best pattern. Now, NVIDIA here, no doubt relative strength. Intel, no doubt it's been the dog. In this particular example, I really don't have a trade opportunity for either unless maybe I say, you know what? I see signs of bottoming in this dog and I sell a $55 put spread instead of the call spread that we just did in the other side. This chart looks like this is a short-term bottom. So I'm trading the weaker one. This one, I have no pattern. It's far from the 20, far from the 50, far from the 200. Come check us out in the Green Trading Room. We have a no-brainer 7-day, $7 1-week trial, and you get to work with Greg and me in real time, not talking about these slides where we start at 9 a.m. We do market review, hit list, gap trades, and we're doing all kinds of trading throughout the day, scalping, day trades, swing trades, answering questions, scanning, and it's a marvelous place. This Beyond Meat, this is an old slide. This thing was $132, but look at this relative weakness. Remember all those questions that we started with in the right column? This is under every moving average. It's lower pivot highs. It can't bounce with the market. This is amazing strength. Red bars ignored. Here's what we call a little bear sandwich. This is a dog. So we shorted it's similar to the one Greg explained to you. We shorted a $10 wide call spread over this resistance. And we get to keep the money as long as it just bobbles around and closes under that short strike. We keep the money. One contract represents 100 shares. So if you sold 10 of these contracts, that would be $610 just immediately deposited into your account. And you just manage it, depending if you want to take the stock short or if it's just a speculative trade, which the majority of ours are. This was
Charlie's question, Dan. It's more, for me, it's just a pattern. Credit spreads are the simplest thing in the world. I mean, once you're using charts, get rid of all the Greeks.
Yeah, Charlie, I'll try to give you the best answer I can in the shortest amount of time we're given, and then feel free to email me. But we like the shortest amount of time. I mean, there's some folks in the industry that we totally disagree with. They don't even believe in technical analysis, and they have a default of sell 45 days because I can't read charts, and that gives me time to work out of a problem. to us, it's a melting ice cube. We look at the pattern and if we say, I don't think it's going above this in 3 days and I can get 61 cents, then we say that's a no-brainer. And then I do have rules for credit spread, rough rule of thumb. I want 10% of the spread width, but you got to use common sense on the pattern, days to expiration, and a final comment. Make sure they are liquid. The majority of options are not liquid. This is a great.
I would add to that, Dan, is like basically what we do is if it's in an uptrend and you're going to sell a credits, you're going to do a put spread, you want a bottoming pattern. Okay, it's not going to go below the bottoming pattern. If it's in a downtrend and it's extended and making a bottoming pattern, it's not likely to go lower, and vice versa. So from there, you've got a bias based on the trend or a counter trend, a bottoming pattern. Go and see if there's premium, and then how much time is there to expiration.
Yeah. This is fantastic for day trading, showing relative strength. So Google here, 15-minute chart. I'm just eyeballing here. It's like the 230 reversal where we're looking to trade the afternoon, whether it's up or down. This particular day, it was up. So Google's here breaking out on a 15-minute chart. Looking at what the broader markets are doing is always part of our plan. I got all my 4 horsemen on multiple time frames here to my right. So if I'm looking at Google, I'm not entering anything unless my horsemen are supporting it. And so at this, where I have the arrow here, Q's had a little breakout failure. So I'm like, okay, I'm doing nothing right now. I'm not entering Google yet. Although you might have entered it here, but let's continue. Now I had a downside shakeout. I don't have the star here. Well, yeah, I do have the star. Okay, so this downside shakeout and snap back, we call this red bar ignored. This on a smaller time frame, a 5-minute chart, that was a buyable retracement. That's where we actually entered and got our beautiful late day breakout. So it's relative strength to the Qs. That's point number 1. I have a pattern. It's a continuation pattern after a breakout. And I waited at least for the market to stabilize, and it did it. It did it on this little bounce. All right, so I think we can probably just go right to charts here, Greg. Let me, these are just, so this is the sector. And then look at this look at this regional bank. Do you think this bank cares about all his cousins? This thing's a total mess. And this thing's in an uptrend above 5,200. Here's another one. This is relative strength. I think I kind of referenced this in the introduction. Look at the day on the spiders here. But I'm showing signs of bottoming at the 230 reversal. The folks in the green room always hear me saying, Greg likes, I think, trading kind of bottoming patterns and new low reversals in the horsemen. And the folks in the green room will hear me say many times, okay, I have evidence now that the broader markets are not going down anymore. I have confidence of a low for the day. Then I say, let's find something showing relative strength. This would be an example. This went sideways as this thing's tanking all day. It never took out the day, it gapped up and never took out the 15-minute low. So that would be a little late day breakout based on relative strength, market holding. Yeah, I think we're ready, Greg, just to look at some real charts now. This we already looked at, that was a duplicate. So our technical based approach starts with Greg's amazing swing trading course, and we have a technical approach to trading options also. So I always direct people to take this. We've had people It's obviously for anybody new to trading. We have folks that have been trading 20 years take this course, and it's the most amazing revelation of concepts. He puts us together in these thought building modules. And I say at the end of the course, you have the what I call the conscious competence to understand it. It's just a matter of seasoning at that point in time. But Greg's course is the amazing starting point. And this is just another link where we have things outlined differently, whether you're new to trading, options, equity trading. So yeah, check it out, email us with any questions, and Greg will pull up his charts, and we like answering your questions in the remaining time and talking about today's subject.
Answer. And any symbol you guys, anybody wants to look at, throw it out there. Frenchie asks, some say don't trade options unless there is a 2,000 open interest, and some say 200. What's the criteria? First of all, I would say if you're looking to trade options that are going to expire in a week, you're not going to find too many things that have 2,000 open interest contracts. Anything that has a bottoming pattern that, let's say, I'm going to explain what bottoming patterns are, but if your criteria like this, what is it, tasty trade, Dan?
Yeah,
Tasty trade?
yeah,
If your criteria like theirs, like it's got to have 45 days, well, maybe something that's near the money might have, and something very liquid like Apple, I don't know, might have 2,000 contracts of open interest. But if you're doing weekly credit spreads and looking for something that has 2,000 contracts of open interest, I don't think you're going to find that unless you're doing spiders or SPX. So that's not a good guideline, right? You want to trade things that are liquid, active, and add patterns to it.
and I would say there's 100 liquid ones. You know, obviously the spiders, Qs, the FANG stocks are all liquid, NVIDIA, you know, Cisco, Intel. I mean, there's so many that are great. And so I don't have a rule of minimum. I just look at the quotes and I want them tight.
So, all right,
There's a put spread candidate right there.
this is the bottoming, but it's a long. I mentioned it this morning to see if it'll close this way. And then, you know, breaking above here tomorrow, it's a long. I know resistance is right here, but you know, it's trying to bottom out. So there's lots of bottoming patterns. You know, it's kind of grind up, but this is a range expansion bar. And you can see we've talked about this, these narrowing bars, and then this one, let's see if it closes at the high at the end of the day. So it gapped up, and so I like this.
Yep, yep.
You know, so you could look over here, $46 options, $46. Let's see, 3,000 is okay. Open interest for expiring in 2 days is very active.
Well, great.
So look at the spread, pretty tight, very tight.
Show them workday, because I just typed, we gave that as a directional long by the stock. And we also, if you want to do your horizontal line, we gave a put spread under yesterday's low. So we have 2 trades, same pattern.
Okay, so what's the other strike?
$5 wide.
$5 wide. And so let's see there, 187. Whatever. Just eyeballing it there. Same idea of a spread. Sell one more expensive, buy one cheaper. Expires when, Dan? Friday?
The next week, so 8 days.
Okay.
Easter's off.
All right. So it's a nice strong pattern.
And today's subject is we have a pattern, a gap breakout, and we have relative strength. Yep, big old inverse head and shoulders.
you know. Yeah. Broke down, went up. Look at the red bar ignored. So that's a nice bottoming type of pattern. It showed relative strength.
Bottoming pattern in an uptrend.
Yeah, looks got a void.
Yep.
Looks great. Earnings aren't until May. Here's the earnings over here. That looks fantastic.
Greg, can you tell Jamie how to get pivots on TC?
You'd have to email me. I can't tell you here. It's too complicated
Yeah, email Greg, please, Jamie.
to send you instructions and all of that. Yeah. You know what's interesting? Let's look at Lulu. A lot of platforms call these pivots fractals. It's a pretty fancy name. I would have never thought, but they call them fractals. Whatever. This doesn't have it. You have to create it anyway. Yeah, so this gapped up today on earnings. I don't know I don't know what to do with something like this, Don.
Well, I just typed out, I've been watching it, and it's kind of a tight base at the low. I'd say after 3 p.m., it might give us a late day breakdown scalp.
I go for a breakout. What that's pattern?
Well, it's at the lower part of the day's range, and I said, let's just see what it does at 3 o'clock.
I mean, I like it because I know it's an excessive gap, but you know, it's bottoming out here. And if the markets should rally, it's definitely something that could move up. The markets are just kind of dead in the water here after that, making that little low there. Pretty tight, narrow range. I like this. I mean, it's, other than the size of the gap, which gives me some pause, but I find that these stocks that gap up excessively, institutions don't sell them too fast. They just don't. XLY, consumer discretionary. Will change. Been getting a little crazy for some reason. Zoom TC 2000 is kind of fading here. Just came back. Is it still displaying?
Yeah, it's back normal.
Okay. Yeah, so this, I'm not sure what you're comparing here, Don. I guess just that W day is showing relative strength to this. This has been going sideways and doing a lot of nothing. Okay, compare this to Lulu. Is Lulu in this? W, is Lulu in here? I think it's just slowing down for some reason. Trying to open up the watch list. It's freezing. Something going on.
Hey, BC, while he's looking at that, Axon, it's in an uptrend. It's in a consolidation period. It's at the 20 MA. On Monday, it was a small breakout failure. So that's my only concern, but you know, just keep an eye on it. I would like it better if it had a couple of bottoming tails or gap reversals to show that there's buyers lurking below. Yeah,
It's locked, Dan. I don't know why I can't. It's it never does this. You want to open your charts? I don't know. Mine is just freezing up here.
Okay, yeah, I can do that. I got my big computer here, so I don't want to show that big screen, but I'll pull up TC. Yeah, BC, I personally don't know what Axon's in. All right, 1 second here. All right, here's my TC on this pattern, on this computer. AXON, so this is what I was mentioning, here's daily up here, this is what I was mentioning. It's in a consolidation and an uptrend. Small breakout failure here on Monday, so I wouldn't be interested, I was saying, unless I had a couple of bottoming tails, gap reversal, we call it a something something. As of right now, it's a consolidation and an uptrend. I don't know what to do with it. We scan throughout the day for day trades, swing trades. I love the WRBs, the 123s, the 180s, the gap trades. Wow, there's no volume there. Bear 1, 2, 3. Wow, only 5 of them. All right, so there's a topping pattern. Bear 1, 2, 3 tomorrow. And that's also could be a call spread candidate tomorrow under the low of these 2 bars. There's a 1, 2, 3, but it's too near major support for me.
Yeah, and click on here since we're talking about relative strength and weakness. That tab be very easy to show
Sure.
relative strength and weakness.
Percent.
Just by sorting these those columns there. These are all the sectors. So just click on percent change.
Yep, I did.
Okay, so hotels are the weakest, then solar, then semiconductors.
No, hotels strongest.
Yeah, they're the strongest today.
Right.
Doesn't necessarily mean they're the best, but they're the strongest today. And then as you click them, here, hotels, just clicked hotels, and now, these are REITs, which have been clobbered. So these are all been affected by interest rates and what happened with the banks. So yeah, they're bouncing, but they're going to come up into sell zones. Whereas, semiconductors that have been leading, I know clicked on that, Dan, they pulled back for a few days. And
daily.
Yeah, so this means they're in a sideways range. We could put other things in here. Don't have anything here. Sort it by volume. Let's see which is the most active today. And AMAT is the most active. So this is pulled back. This is pulled back. Dan's flipping through charts. Anyway.
There's AMAT. Go ahead.
Yeah. This is pulled back. It's at the rising 50. It's a little sloppy. It's an inside day. It probably needs a little bit more time. Put this on an hourly chart. See, it's still in a downtrend. So we would maybe a little bit of bottoming action, maybe another day or so. This is something that I'm putting together, getting closer to start recording. How to put this together. It's going to be phenomenal for multiple timeframes for day trading. Putting together how to start with your daily chart and move down to a next time frame and move down to a 5 or 2 minute chart for day trading opportunities. So this could be a starting point, but it's just not ready yet. Click weekly percent change, and we'll see what's stronger on a weekly time frame. Weekly, click it again. And that's pretty low volume stuff. So there, here, click this semiconductors. That one's equipment. Yeah, that one's relative strength.
Sure.
This one, okay, this is better. This is low volume. Intel, MU has been strong, higher volume. I'll click on MU.
That was earnings today.
Yeah. And so that one broke out. It's showing relative strength. That doesn't give us entries, but look at the weekly.
Yeah, top of the range, big bottom.
Yeah. But this in another few weeks could be great. this could consolidate up here. This could be a big mover. So from here is where you put some of these in thumbnails, and find, put them up there and just watch them day to day, keep an eye on them. And, yeah, be saying, if we set up charts like yours, we could scan in 3 different timeframes quickly. Yes. I mean, you could even write scans within here that incorporates 3 different timeframes. So once you become a member with Master Trader, either through a subscription for a newsletter or the green room or take a course, if you have this platform, this is just touching the surface of what, we have available here that we share with you for free. So, I mean, we want you to be a member, but all of these scans, which Dan's needs to be updated. I mean, as far as these, you can put scans within these columns, but he showed you the scan list, and there's tremendous amount of information here to find trading opportunities with the patterns that we spoke about today. So yeah, join us at Master Trader. And if you have this platform, we're happy to share it with you, no cost. So we'll be back next week.
Have a great week, everyone.
We'll talk then.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.